Welcome to the show. It gives a great pleasure, as always, to introduce Mr. Marc Ostwald, strategist at ADMISI. Very good morning to you, Marc.
Good morning.
Right, let's kick off with the headlines. Brexit deadlock sends the pound down and the FTSE closes in an all-time high.
Yes, we've been through this so many times over the past year and a bit. It's always going to be that sort of pattern. Is Brexit deadlock any real surprise? The extent of the reaction yesterday seemed to be rather excessive, given that we know the talks are deadlocked. This is hardly news. It would only be news if we saw some progress. At some point, it is to be hoped that there will be some progress made. At the moment, the constellation around this is not particularly good. However, that sort of relationship of pound down, FTSE up, is likely to be sustained, and vice versa. It's as simple as that, and there's probably going to be a lot more volatility in the pound as we head into the end of the year, particularly if things remain as deadlocked as they are.
It was interesting. There's an article in the FT that I keep sort of carping on about recently. Said fund managers couldn't actually trade cable at the moment because it was just literally so political in terms of the way it was trading that you couldn't pick levels. I would not want to be trading cable.
No, because you've got this added complication also of the fact that there is the potential for this rate hike in November. I rather suspected that if we do get it, it'll be just that one reversal of last year's move. And as I've said many a time, it is primarily about the rate differentials going forward, both versus the euro and versus the dollar. And that, in the longer run, the Bank of England is going to be well behind the Fed, well behind the Bank of Canada, possibly ahead of the ECB, but not by much.
Okay, so let's move on to FTSE 100. One to watch, just GKN this morning. A profit warning on the back of the aerospace arm.
Well, I suppose we shouldn't really be surprised given that announcement of 2,000 layoffs at British Aerospace. They must be very dependent on British Aerospace for a lot of their orders. It really sort of does underline that the aerospace sector, obviously we've got this problem between Bombardier and Boeing, which is obviously affecting Northern Ireland, is one under a little bit of pressure. It's both political pressure as well as clearly there's been, we've seen it with some of the airlines closing down, Air Berlin going, amongst others. So it's the competition in aerospace, particularly in the airline sector, is hotting up.
Intense, yep. Okay, let's have a few words on coking coal future. What are your thoughts there?
Well, a lot of it has been run up on the hopes for infrastructure spending in China, but that sort of neglects to take on board the fact that obviously they are clamping down on the use of coal in China, as we've seen actually today with the imports data, with a big rise in imports because there isn't actually enough domestic supply because it's been clamped down on. On the other hand, it also reflects in part the fact that we've seen the fall primarily since early mid-September, is also a reflection of the slightly stronger tone that we've seen in the dollar, particularly versus the yuan. So that's part of the factor. I'm not really confident that coal has a great future. It is very much dirty energy until someone develops some carbon capture, which there's plenty of potential for. But unfortunately, the seed funding from the supranational banks like the World Bank is not forthcoming. Hopefully, the AIIB might do something to help on that front.
Understood. Let's have a few words on iron ore. Now, again, that chart doesn't look great to me.
Well, a similar sort of thing in terms of when did the move start, and yes, it is partly related to the strength of the recent strength of the dollar that we've seen. But here too. This is obviously the Chinese iron ore future, and again there's problems with China clamping down on the quality of some of the steel producers, and so they're having to import more iron ore from places, more higher quality iron ore I should say, from places like Australia and Brazil, meaning the demand for domestically, not necessarily in terms of overall output terms, so when you're looking it through to steel, but domestically is going to be waning somewhat, particularly as they start to try and get rid of some of the overcapacity that they've got in that sector.
Okay, so let's look at the cross now, the iron ore US nickel cross. Clearly an outperformance here.
This is a very big distinction. So, one is a story of China clamping down. The other one is the story that nickel obviously is going to be a critical part of the electric auto scene, and there's a lot of support from it from there. There is, on balance, a bit of a shortage out there at the moment, and that's obviously helped it to recover somewhat. But again, we see a similar pattern there for September, that initially the push down or the correction to the rally that we'd seen since mid-June was largely dollar driven, and I think this obviously is something that people need to bear in mind as we go forward, that if the dollar is going to rally largely on the basis that its interest rate premiums over other major currencies is going to increase, then it will present some headwinds, particularly for those commodity sectors where the demand profile really isn't changing that much.
Understood. Let's have a few words on broker upgrades. We had sort of WH Smith's come out with a cracking set of numbers this week. JP Morgan, Cazenove hold and an overweight position. We were talking off air. They've taken over the airports, right?
Yes, I mean they've obviously done a good job of capturing what is remaining in terms of the newsagent market. All credit to them because it's hardly anything which is to do with the high street, whether it's in the UK or in the US or in Europe, is a very, very challenging environment. So kudos to them. One does have to wonder what the future looks like, though, particularly as we move to everything being more and more digital.
Yeah, agreed. Okay, the core number shows today, saw on the headlines of City AM, 50, and this is the, they reckon they're basically travelling between London and Edinburgh to just 50 minutes, according to Mr. Branson.
I think it's sort of one of those marvellous numbers which I underline to everybody for all the fears about technology taking over. There are a lot of things which are happening in the technological arena, and one has to think of it on the broadest space. It's not just IT, which are extraordinarily positive.
Yep.
And we're going forward in leaps and bounds. And 50 minutes from London to Edinburgh, that's something the UK could really, really do with, because its transport infrastructure is not great. So it's good that Mr. Branson is investing there.
We'll agree to that. Right, let's wrap up this segment with the economic calendar. Obviously, US retail sales and the CPI numbers. How important are they today?
They're very, very important. Retail sales is going to be boosted hugely by hurricane effect. So headline, we're looking for 1.6. That's because of the big leap in auto sales. Could be even higher than that.
Okay.
Ex-autos, we're down to 0.9, but that's also being heavily boosted by gasoline sales, gasoline prices. Remember, the US number is a value number, not a volume number like here in the UK. Core measure, still nevertheless respectable, 0.4, both of them. Be interesting to see on that front when we come to the CPI component, what happens with those auto sales, because a lot of those are insurance related purchases. So the automakers have been suffering from a bit of an inventory overhang because sales have been generally weak until last month this year. So have the automakers and auto dealers used the opportunity just to dump excess inventory, or have they also used it to up prices, or rather remove incentives and discounts, which could push the CPI up a lot higher than people are expecting? We're already looking for a big number, 0.6 month-on-month headline, to jump the year-on-year rate from 1.9 to 2.3. Less of an inflation concern then. Core number is expected to be relatively subdued at 0.2 for 2% year-on-year. The only caveat I would have on that is clearly airfares, which are in the core measure, would have been impacted by the rise in oil and distillate prices.
Right. Asking all our guests final questions. A Bank of England hike in November, yes or no?
I think they've painted themselves into a corner. I would agree with the BCC that I think the actual economic backdrop probably doesn't necessarily require a rate hike. However, I still view last year's rate cut as a mistake.
Okay, and in terms of Fed in December, 88% probability, I think, you go with that?
Definitely. The only thing which is going to derail it is if we have a serious derailment in the credit and equity markets, but it would have to be a big one.
And finally, stock markets higher or lower by year end?
Probably higher, but as the reality, particularly if the biggest risk is that we actually start seeing inflation pick up in quite a lot of places.
Yep.
A lot of it may be hurricane related, and then people start worrying at whether central banks are actually behind the curve. That could be a big derailer.
Mark, as always, thank you very much indeed for your time.